Rick, it's good to sit down with you again. For those who don't know who you are and who Hippo is, can you give us the quick?
Yeah, happy to. Yeah, so my name's Rick McCathron. I'm the CEO of Hippo Insurance. Hippo is redefining homeowners insurance and some other things that we'll talk about, I think, today. But glad to be here. I'm an incumbent guy. I've been in the industry 32 years. So sort of found that blend between insurance and technology at Hippo 8 years ago.
So you would never be the InsurTech startup person who's calling the incumbent folks stupid dinosaurs who can't get out of there because you'd be talking about yourself.
Yeah, it's funny because I was not the founder of Hippo, although I was with the company from the beginning. Our founder is a gentleman by the name of Asaf Wand, and my very first meeting with him, Asaf said, "We're going to disrupt the insurance industry." And I said, "I never want to hear you ever say that again." I said, because when you're telling...
He might have said that once or twice again.
He did, and Asaf, as you know, is difficult to control. But one of the things that I told him, I said, look, Asaf, like, when you're telling the industry that you're going to disrupt the industry, what you're really doing is saying that your kids are ugly. And, you know, the insurance industry has done some amazing things over the last, 2 or 3 centuries. It needs to be modernized, and I think InsurTech has done a very good job of helping the modernization of insurance. But look, we're all doing our part to try to make experiences better for customers, better underwriting results, and I'm just proud to be part of the InsurTech community.
Yeah. Well, so we sat here last year and talked a bit about some of the journey and changes, transformations that Hippo has gone through. It's been 10 years. Where do you stand today as you look back on that, from the early days to today? How would you sort of frame up that 10-year cycle?
Yeah, it's interesting. All of those of you that are more in the earlier stages of startup, you've probably already recognized that whatever your original plan was, you're going to have to augment, change, shift, pivot from that original plan. To me, nothing is static. Everything is changing, and I have never seen a successful company in a straight line path to success. It is full of peaks and valleys, shifts and changes, and I think the successful companies are the ones that are able to actually pivot and shift and change quickly based on new learnings, new data, and frankly, shifts in consumer appetites and industry dynamics. I've got twin 18-year-old boys. And 10 years ago when we started Hippo, they asked, what do I do for a living? And I told them I make decisions on imperfect information. And tomorrow I'll have more information, and eventually I'll pivot the decisions based on the information.
That's teenage life, isn't it? Yeah. One of the things that we've been talking about for years, especially through and coming out of the pandemic, is customer experience and CX. And we were just talking in the last panel about the Amazon kind of challenge to us. We have to be more like Amazon in the customer experience. For all the energy that these conversations have had around it and the progress that we've made, I think from the customer's perspective, we actually haven't. We're still sort of treading water, if that, because that bar keeps moving. I'm curious about your take on that, especially because a lot of the early sort of war cry for InsurTech was about a revolutionized sense of product and experience. But as an industry, we're still not really doing great. We're not at the forefront of whatever consultants are studying customer experience say, oh, this industry is doing great or these companies are doing great. We're still not there, despite probably billions of dollars spent on it in the past few years, and certainly a lot of energy. So what's your take on that customer experience sort of battle, if you will, and where we stand on it, or why we're not making the progress we should?
Yeah, Brian, I think it's a good question and it's a good observation. So when I really think about our industry, the thing that is most unique to me is how complex it is. In fact, Hippo is made up of a combination of insurance professionals and technology professionals. And some of our early technology professionals, they said, look, if we had any idea how complex insurance was, we never would have come to work for Hippo.
Yeah.
And the reason that it's complex is you're trying to compete on 2 different things that are sometimes at odds. So you need to have an exceptional customer experience to make sure that you're having a product, selling something, creating better outcomes for your customers. But you also need to make sure that whatever you're selling, that you also have an underwriting profit at the end of the day. And sometimes those compete. And so, if you really think about insurance, it's one of the only products that I can think of that you don't know what the cost to manufacture it is until years down the line as the claims start coming in, as they start developing. And I think the industry is doing a much better job now. Frankly, I think if I look back and think about what is the most successful aspect of InsurTech, I think it prompted many of the incumbents to start paying more attention to the end customer and making sure that, without them, I tell my salespeople all the time, until somebody sells something, none of us have a job. And realizing how important it is to actually have a customer view. We're not there yet as an industry, but we're getting closer.
Yeah.
And frankly, I think AI is one of the aspects of it that might help a little bit.
Yeah. So the point of this conversation is that 10-year journey as an InsurTech to, you said as we were coming to the stage, you're like, we're an incumbent now, we're legacy now in a sense. 10 years is a long time. Not as long as the industry, but you're not a startup at all anymore, I would say.
Right.
What I want to ask you about is that insure and tech, the balance of the two, and I think that balance has shifted for Hippo over the years and how you think about that. What I'm hesitant on is, I think that's an easy out that legacy folks have, is to blame the tech side of it and say, oh, they're not profitable or they're focused on the wrong things. If you look at profitability for the industry the past couple of years, tech or not, we've been very challenged. And it's not because we're startups or tech or whatever, it's the industry is challenged the past couple of years. I want to understand that balance for you and what you've seen over the cycle for Hippo, but then also, do you look at that question differently today given, last year we talked a lot about hail and what that's done to the industry, and of course we could add wildfire to it, it just hadn't happened, the LA fires hadn't happened yet. Obviously wildfire was already an issue. But do you look at that balance differently today because there's a broader issue of profitability for the industry, or do you think it's still different for an InsurTech, as it were?
Yeah, I think it's the same, and it's a little bit eye of the beholder. The InsurTech companies, whether they were long established organizations or new organizations, they all brought a new product, new division, something new to the marketplace. I've been involved, as I mentioned, I've been in the space 32 years. I've been involved with large carriers that bring new product to market. There's such a thing called a new business penalty. Everybody knows it, every actuary knows it. When you write new business or put a new product to market, it takes a few years just to figure out what are the consumer dynamics, what types of customers are you getting, what holes do you have in your rating methodology. Insurance is one of the products that if you're selling a lot of it in a particular area, you need to stop and figure out where you screwed it up. Like, what did you screw up with pricing? What are you doing wrong? Because whether you're direct to consumer or partner through agents, if you have holes in your rating or your underwriting, they will find those holes. And it takes time to plug the holes. And so I really think InsurTech now is just starting to, those of us that have been around for a little while, getting into its stride. I think the three big public InsurTech companies that people talk a lot about are Lemonade, Root, and Hippo. And I think all of us have dramatically improved our loss performance. Our homeowners loss ratio now is in the upper 50s, low 60s. But it took time and discipline to get the portfolio where it needed to be.
Yeah. I don't like grouping the three of you together, because from the outside, and I'm not going to ask you to say anything about this, you don't have to comment on your peers, but I see two of you much more similar than the other from a profitability standpoint, from an underwriting acumen and kind of underwriting mentality standpoint. Maybe I'll leave it there, but...
Brian says he doesn't want to put me on the spot, but he's trying to put me on the spot.
You just sit there awkwardly. No, it's fine. But I do think, it's back to your point about that difference between insure and tech and recognizing like, hey, it's great to land a bunch of business, maybe you shouldn't have. And I think a couple of you have that sense that like, wait, we need to be a viable underwriting business enabled by tech and tech forward and great CX and all that. But at the end of the day, we still have to be a viable book of insurance business or we don't succeed. And I think there's a different mentality for one and three. So I'm just saying the simplification of lumping everyone into one pot because, oh, there are 3 big insurtechs that went public at the same time. That's not a segmentation approach. It doesn't make sense. They're totally different companies and should be looked at that way.
That's right. And all 3 companies are very different. Does anybody think that auto insurance and home insurance are remotely similar? And the answer is no, they're not remotely similar. Different distribution strategies, different appetites from risk participation.
Yeah.
So you're 100% right. And one of the things that I do think is important is, despite the fact that all these businesses are different, all of your businesses are different, we do all get painted with the same broad brush of InsurTech. Doesn't matter, one of the things that's interesting, we're having an investor day here in New York next week, and we have a slide of the leaders of the company, and there's something like 10 or 12 names on the slide. That slide has a combined 250 years of insurance industry experience. And what that slide signifies is that these are people that were very successful within the insurance industry doing other things. They didn't forget how to underwrite or forget how to handle claims or forget how to price policies correctly, yet the entire industry and investors tend to lump InsurTechs separately. So I do think it's important for all of us to wish and help and sort of want each other to be successful, because so goes some of you, us included, so goes all of us to a great extent. Yeah. And so I think that aspect is important.
Yeah. I think that's fair. I want to kindly throw shade on another thing the industry's talked about that we haven't made the progress. We haven't made enough progress commensurate with the level of hype around it, and that's 2 things. Embedded, which before AI was that's all you saw at other conferences, and this one was people talking about embedded. It hasn't really materialized in the way that we thought it would. Maybe it still will. And the other is predict and prevent, which again was another war cry that you've heard for years, and I think by and large, we played around with some things. There's some tests and pilots of IoT and some other things, but have we actually moved the needle on it? And when people ask me for examples of those 2 things, there's very few companies I come up with. Hippo's one of them on both. So I'm curious, how have you been able to actually move? You do have quite a bit of embedded success. You have been doing predict and prevent and using IoT and sort of safety engineering risks from day one or close to it, as long as I've known Hippo. How? Because we as an industry have still been stuck. How have you made that progress, or how's it played out for you?
Yeah, I think that's a great observation. The bottom line is, despite how quickly we want to move the industry forward, insurance in the industry is a slow-moving industry for lots of different reasons. Some are regulatory challenges, some are the fact that you only sell a policy once a year, some are the fact that most consumers don't think about insurance, nor do they want to think about insurance. The reason you see Geico and Progressive hammer it out and spend billions of dollars in advertising is because they need to be in front of the consumer, that once every 3, 4, 5 years, the consumer is actually thinking about making a change. And so it just takes time. It's a slow-moving environment. Now, I do think there's also a demographic component of it. I think as we're seeing younger people get older, that are more comfortable with technology, the simplicity of embedded, our embedded offering is pretty simple. We embed with many of the nation's largest home builders, and if you're buying a home from Lennar, as an example, and they're going to, in the Lennar purchase flow, it says you're going to need home insurance before you can move into your new home. Would you like to see a quote? Yes or no? Click. Yes, easy. That opt-in rate is north of 90%.
Yeah.
We've already pre-quoted every permutation of every home that Lennar is making, every lot, every model, all of those. As soon as somebody hits yes, then the price pops up. And then it's like, would you like to check this box, secure insurance, before your home closes so you can, be rid of this one particular friction point? And 75% of customers say yes and buy the insurance right then. Okay, that simplicity, that is the beauty of embedded insurance, is what you're really doing is creating a frictionless environment and flow. And I think as an industry, we are figuring out how to make things with less friction, but still maintain quality underwriting. And it takes time, but I think the industry is moving more in that direction. I think AI is going to help. And there's a lot of conversations about who's using AI, how will it be used, all of these different aspects. But the way I think about AI is it's information, and it's real-time information, customized to the client or that prospective client, which simplifies the process. Whether humans are using AI or AI is doing it on their own with artificial humans, I think that will embolden the idea of embedded insurance.
I think part of the story in embedded for Hippo as well is we can't just do this ourselves. We need to have a panel of peers that we can work with to take that risk. Like, you write 200 houses in the same development or however many, they all get hit with the same weather at the same time. That's not a great way to build a book. You have to have partners that you can share that with. And maybe that's not something the industry understood in those early embedded stories, is like, we can't just come by ourselves. We need to get a whole coalition together.
Yeah, this is not a winner-take-all industry or market. There's plenty of opportunity to go around, and everybody has a little different appetite, everybody has a different spin, everybody has a different flavor. Yet you're going to get customers that may not match, or you've written too many in a particular area, to your point, that may not match what you actually need. So what are you going to tell that customer? Are you going to say, I'm sorry, we can't help you? Well, that's a shitty customer experience. What you'd much rather do is say, we can still help you through one of our partnerships. And you're seeing it across the board. Almost every major insurer has an internal agency now, whether you're Liberty or Farmers or USAA or Geico or Progressive. They all have their own agencies, and they all partner with people that can be deemed competitors. And I think that whole idea of we're competitors, frankly, is starting to disappear. We have one of the portions of our business that's less understood, although very favorable, is we own our own carrier, and that's Spinnaker Insurance. Spinnaker is a fronting carrier. So any of you MGAs out there that need a carrier, you should reach out to Spinnaker because they might be able to be the paper that you need, both admitted and surplus lines. When we bought Spinnaker, we bought it so Hippo homeowners would have a balance sheet. But what we learned in the process is there's other really good MGAs and other really good operators. And so we should partner with them, rent them our balance sheet. And in that partnership, we can also be distribution partners. So, one of our best programs is Coterie Insurance. And Coterie distributes some of their offerings through an insurance agency aggregator that we have partial ownership. So we help each other with distribution on top of us helping them with rated AM Best paper.
And it gets you diversification. So now you're talking about small commercial and lines of business you would never have played in otherwise.
It's exactly right.
Coterie is a great business.
It's exactly right.
I was at Hiscox for years. Our biggest brokers, if you will, were Allstate, Nationwide, Progressive, Geico. Their insurance, and people are like, what are you talking about? Because this partners flow to bring in business. I'm not letting you off the hook on predict and prevent, and I know that's another piece of it. So what is that story for you? And again, how has Hippo been able to actually deliver on that? Whereas as an industry, I think we're still talking about it, but not making the progress that we need to.
Yeah, I think there's two different components of this. So one is prevent, which I think is the real opportunity. The other is how to handle things that are happening real time. So probably the most important one related to homeowners insurance is interior water losses. Next to weather, interior water losses are by far, you're a claims guy, like by far the worst exposure that you have within homeowners insurance. Well, there's a lot of smart companies that have created these IoT devices that let you know if there's a leak. Well, but you better be home to turn off the water, or you're gonna go, hey, there's a leak in my home, and when you get there, you're gonna have 2 inches of water all over your hardwood floors. So the way that you solve that is with water shutoff technology. Water shutoff technology is complex. If you go with one of these devices like Flow, not only do you have to have somebody come and install the device, it's actually installed at the meter. You need Wi-Fi out there to get the signal back and forth, and you need electricity out there. Like, it's a difficult installation. Some customers are great. We call those customers Generation Better customers, ones that want to partner to help protect their home. These are the ones that when you reach out and you say, hey, we can offer you IoT devices to mitigate claims, these are the people that go, that's awesome. You mean you can help me with that? A non-Generation Better customer is one that says, yeah, I don't know about that. Like, that's Big Brother. I don't want my insurance company this much into my business. Okay, they can go somewhere else, and we can help them in our agency go somewhere else.
I like my wet carpet just fine, thank you.
Exactly. So, but other than those segment that are say, I'll install the water shut off device and I'll put all these IoT devices and I'll do and I'll make sure that the batteries stay in the devices and they stay active. And when I get a disconnect notice, I'm quick to go reconnect it to the internet, you know, that type of thing, to the Wi-Fi. So, but the better opportunity, I think, is proactive. It's having people come to your home on a subscription basis and say, twice a year we're going to check your HVAC system. Twice a year we're going to make sure your gutters are clean. Twice a year we're going to, or once a year we're going to change your smoke detector batteries. Or once a year we're going to come and clean your dryer vents. Once a year we're going to drain your hot water heater. Things that most customers don't want to do, but if they do, they create a much better experience for them, because the best claims experience is the one you never have.
Yeah.
And better results for the underwriting company because you're avoiding these claims. And I think that's the direction that on the Hippo home insurance product that we're moving towards. And not just about, we'll help you with devices to let you know when things have gone awry.
Yeah. How do we figure out how to pay for that? Because that's a hang up. I talked about this yesterday in another session with Andrea, your CMO, where we love the idea, but we don't know whose P&L this needs to go into or whose budget this goes into, so we can't move forward with it. And I've heard that at carriers. How do you figure out, is it charged to the customer? Is it eaten internally? Is it baked in the product price? Where do you sort that out?
It's a little of both. So Generation Better customers already have subscription services from their local AC guy that comes out a couple times. They're already paying for it, but yet they're not getting a benefit on their insurance policy for reduced frequency and severity. There's that component. The service providers, if you don't, because the hardest thing to do this is actually who's going to show up at people's houses and do the work, and somebody that you're proud of. Like, one thing I tell my team is that I never want to hear anybody ever say, oh, that wasn't a Hippo employee that showed up at your house. That was a, ABC employee that showed up at your house. Like, you say that, you're fired. Because to the customer, we're all Hippo.
Yeah.
Hippo's the one that dispatched them to your house. Hippo's the one. We need to own that experience. And so it's really, really important to make sure that you have the right channel of folks that can do it. But people are paying for it. Those third parties that you might have, they're buying leads. They're spending customer acquisition dollars on some form of advertising to get their customers. There's money in the funnel to help fund some of these things. Better loss results, customers willing to pay a little bit more for the services, so value add, and the people providing the services reduce customer acquisition costs. Yeah. There's money there, you just have to figure out the right partners to do it with.
So that sounds like a leadership mentality to recognize that, because the traditional approach is it's trapped in bits and pieces of different budgets and then we make no progress, even though we saw the ROI was positive. And then we just sit and complain about the results being what they are.
Yeah, Brian, I think that's exactly right, because we've had lots of people reach out to us and say, Hippo, in your agency or with your home insurance customers, would you cross-sell our product? Yeah, we do sometimes. Sometimes it makes sense, but it'd be much better if we actually build an integrated product together.
Yeah.
It's a much better experience for the customer. Just cross-selling somebody's product and getting a 5 or 10 or 15% attach rate is interesting, but not game-changing.
Yeah.
And so building these things together where you're thinking about the total universe of dollars, it's almost like looking at a portfolio from an aggregated perspective, not from individual programs or individual states. Frankly, the reason anybody writes insurance in the state of California is they kind of look at it as a loss leader because they want to be national or want to be in other states or want to do other things or like auto but don't like home. Like, So sometimes you have to play in an area that you might not make the same margin that you would normally, but if you look at it in its totality, the overall opportunity is significant.
Yeah, the global optimization is not the sum of local decisions.
That's right.
It's sometimes you have to step back and make that bigger choice. You mentioned your Investor Day. We should have moved the conference so you could share everything that you're sharing. And I know as a public company, you're limited. And the Javits Center wasn't willing to accommodate, nor were you guys willing to change your timing. But I know you can't say everything, you can't give specifics, but are there hints you can give us or something you can telegraph that sort of gives a sense of what might be coming for Hippo as we look to the next 10 years or at least the next 10 months?
Yeah, I was also supposed to have, our Spinnaker operation is in New Jersey, and so we were actually scheduled to have a town hall meeting with our employees that I also had to punt until after Investor Day.
I was going to say, they could have come here, we would have filled the seats.
Right, there are several here, I think, so. But what we're really proud of at Hippo, and we're going to highlight this in Investor Day, is that we went public as a company about 3 years ago, and a difficult time to go public. There were things that we did wrong. There were challenges at a macro level, both with we went public versus via a methodology called a SPAC and a de-SPAC. I won't bore you with the details, but that was in flavor when we started it. It became out of flavor when we finished it. The public investors were willing when we started to say, we're okay if you're not earning a net income profit right now, you just need to have path to profitability. That pivoted almost immediately right after we went public. And frankly, insurtech companies, those that were public, or those that people knew their financial results, were all struggling because it was early in their life cycle. But one thing that I'm very proud of is when we went public, we had an Investor Day almost exactly 3 years ago. And in that Investor Day, we put out financial metrics that we wanted to achieve 3 years into the future. So we put stakes in the ground 3 years into the future. For all of you that do financial forecasting know how difficult it is to predict what's going to happen next quarter. Yeah. Try picking what's going to happen 3 years from now. I'm proud to say we've hit every single one of those financial metrics, exceeded most of them, and we are also really excited to put that 3-year forecast out to the investment community next Thursday to tell them where we are going to be 3 years from now. And I think there's a lot of excitement around that. And I think we're now to the point, we told the street that we would be not just cash flow positive, because we are, but net income profitable by end of this year. We've reinforced that guidance. So we're no longer on the defensive, because we had a couple years on the defensive. It's time for Hippo to go on the offensive, and we're excited for what we're going to share.
Well, I will say, you said it before, but we don't know the cost of product. So predicting out 3 years is tough. Right now, the number of companies who aren't willing to even predict this year that have pulled guidance for the year. So you did that 3-year prediction and plan when you don't know the product, because that's insurance. So even harder in our industry than these other easy industries that are all backing out of it. But kudos on hitting those numbers, because obviously a lot has happened in those 3 years and a lot of uncertainty. And you're right, I think the timing was very difficult, where you were sort of set up and then everyone's mood changed instantly. For the industry as a whole, for insurtech as a whole, but certainly, the initial appetite changed quite a bit, and I give you credit for sticking through.
No, I appreciate that, and it kind of goes back to what I said. Like, we didn't do it exactly the way we had planned, but we figured it out. And I think good management teams figure it out. They realize how they have to shift and pivot, which is why I'm so comfortable putting stakes in the ground 3 years in the future, because I know our team has the capabilities to adapt and overcome. Yeah. And frankly, we've proven it over the last couple of years. If you simply look at all of our performance numbers, they're all going in the right direction. And I think we've built some credibility with the investment community.
So I will say, to the public community more broadly, transparency and ownership of what has and hasn't happened or hasn't worked, and your hand in that is hard to come by. I think you guys have been very forthright of, look, we were doing this, we didn't like how that was working out, we should have been doing it this way, here's the change we're making. You know, the concentration of risk when you get all those homes through a builder, thinking about how to spread that out, that was something you were very upfront about. Some of the hail results, again, very upfront, whereas I see a sort of spin from old and new companies alike elsewhere. I will give you credit for that. I'm an investor as well, and I've appreciated it's like they're telling the truth about it. Yeah, that's tough. I can have faith in the plan that they're putting out ahead. And yeah, you've hit or exceeded the numbers, which is very rare. And I can't say it's because you were sandbagging. I think there are a lot of people like, it's a lie, they'll never do that, and you have. So yeah, very, very difficult, but it's good to see that. So that's what we'll see next week is the next 3-year plan.
Yeah, if you're interested, I think we're live streaming it, so you're welcome to watch.
Netflix and chill, but with
right. It's not going to be nearly as exciting as doing something else with your time, but if you're an insurance geek like we are, it might be something worth seeing.
I don't know, make some popcorn, sit down. That sounds good. Thank you so much for joining me again for this, and good luck next week.
Always my pleasure, Brian. Love it. Thanks, buddy.
Rick.